Hello, this is Adam Hewison. I'm coming to you from the Digital Studios of Market Club, and what we're looking at right now is the Dow. Right here, it's a monthly chart, and this is our first trade triangle, 624 at 11,731.60, and that said the Dow is going down. Now look where we are today. We're currently trading, we're doing this live at 7,859. Some big things happened this week, and I want to share those with you. And let's take a look at something a little closer to a weekly chart, because we trade with the monthly triangles. And here's the weekly chart. As you can see right now, it's pretty much on September 4th, right here, not that long ago, on 11,290 we had a signal to get short, and you can see what's happened since then. We discussed this pattern before. This is a continuation pattern. Of course, Wednesday's close below 8,000 on the daily chart was an extreme blow for this market, and it looks as though we're going to go quite a bit lower, down to 6,700 or even the 6,600. That's our target zone for the Dow right now, and that's quite an extreme from where we are currently trading at 7,804. But what I really want to show you is this, and I want to show you, if we go back to our monthly chart, and what you can do right here and say OK monthly, and you can see that we had a signal at 11,731. That was our first major signal. Now this is on June 24th, and as you can see how fast this market came down. Nobody can predict how fast things are going to go, but what Market Club can do with its trade triangle technology right here, 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 and here, it can tell you what the trend is. And what we do, we use the monthly triangles for trend, okay? And then we use the weekly triangles for timing. So let's see how this works out. So we're looking at this date here, June 24th. Everything, we have not had another buy signal, so everything is negative for the Dow. So let's take this off the screen. Very simple. Just click on that, and we're going to go to a weekly chart. And as you can see, our last signal was right here on the last signal we had was here on the 4th of September, and that was 11,290. You can see what's happened to the Dow, and this is not a positive sign. You've got the market trading below support, meaning there's still further downside to go. We're looking, as I said, for a target of 66 to 67, and you can see that's a good sizable move from here, at least another 10% or more we're going to see in this market. So that's what we're looking for. The indices and all of the other indices are pretty much the same, and we can look at those also. Let's just take this off very quickly, and let's take a look at the NASDAQ. Again, you can see the action here is basically pretty much down. Let's take a look at our indicators and see where we got short the NASDAQ, and then we'll go to our indicators, our trade triangle indicators, and here's the monthly. And as you can see from the monthly, we got short the NASDAQ at this level here, 2,266, currently trading half of that. So you would have captured all of the move down and protected yourself. We do not buy into the position where you should stay in stocks because they're defensive. That's just dumb. You basically want to be out of the market when it's going down, and you want to be in the market when it's going up. It's pretty simple. Or you could, if you're very aggressive, you could actually go short this market. So here we are. We trade, again, the monthly for the trend and the weekly for timing. So if we take everything off the screen, very simple, we'll look at our weekly chart, and we'll look at our last signal. And as you can see here, the last signal we had on our weekly chart was right here on the 2nd of September, and at 2,345. And look at the market now. So obviously we caught the move. It's still going down. There's no end in sight for this market, and we expect to see further levels. If we take this out all the way, which we can do, we're getting close to the levels we saw back here, and this is a long time ago right here. So that's, we would definitely be looking at that for a target zone below 1,200. So we have some further downside to go in this market, and that's a classic example as they slide faster than they glide. But remember, trade triangles keep you out of trouble and keep you in the black. So this is Adam Hewison for Market Club, looking at indices. The bear trend is intact, unfortunately, and it's likely to continue for quite some time. So keep your powder dry. There'll be some great opportunities in these markets that we can take advantage of. So I'll talk to you soon.